Hello, I'm Dominic Hobson, co-founder of Future of Finance. My guest today is Peter Gargone, CEO of N-Tier Financial Services, a company he set up more than 20 years ago after experiencing at first hand the challenges investment banks had in managing and using their data to meet the needs of traders, operations managers, risk managers, and especially compliance with their regulatory obligations. Peter, thanks for joining us.
Dominic, thank you for having me.
Now, this is something of a cliche, but data is an opportunity. It offers us, new insights, better predictions, new customers. You can also use it, of course, to manage your risks, as I mentioned in my opening remarks. You can avoid paying regulatory fines. You can find new customers. You can find customer assets which have gone missing. The clients that you deal with at N-Tier, are they primarily thinking in terms of seizing opportunities here, or are they primarily thinking in terms of managing risk?
I think from our client base, the primary focus is reducing risk and regulatory risk across the board, as that's a sort of key financial issue for them if they get hit with fines, right? On this, the insights, the better predictions, and a lot of the aspects you get out of fixing the data that we deal with on the regulatory side tend to be secondary benefits of it, but the primary focus for most of our clients is the regulatory side.
So does that mean that the focus of the platform that you've built is both trading and operations and risk management, or is it one of those things more than the other two?
If you look at the data that the regulators are requesting at this point, every time they expand the regulations, they pick up more and more data. That data gets down to product types, into people categorizations, your customer data. It really hits all of it, right? It just hits it in different ways for different verticals within the IT infrastructure. So from a risk perspective, you're looking at all the same characteristics of the customers that they may be looking at for the insights and the other things. They're just sort of sliced and diced in different ways based on which kind of regulation you're reporting on. But the data set's broad and it covers pretty much everything the banks have.
Well, we'll come back to that question of the scale of data in a minute when we talk about the consolidated audit trail. But just let's stay at a high level for a minute. When you're helping these organizations get to grips with their data, which is a bigger problem? Is it actually aggregating the data, which is scattered all over the place, or is it actually monitoring the emergence, arrival of new data?
They're both challenges in a sense, right? Because they have different dynamics. For the aggregation, the data lives in different places in many cases for one in particular reg report. And what we have seen over time is as the regulators expand the scope of their reg reporting, they pick up more and more data from different verticals within the infrastructure. So that aggregation tends to be a challenge because you have to tie back the data across different data sets, which look completely different. And then, layering on top of that, the ability to validate it is also a challenge. So they're both equally challenging, but they've got their own different dynamics around those challenges.
The question is how you solve those challenges. And when I first looked at this, or first became familiar with this area, maybe more than 20 years ago now, the solution to this data being all over the map was that you built a data warehouse, and then you could run applications off that data warehouse. Are data warehouses still part of the solution? And if they're not, what happened to them?
They are to some extent, but the problem with the warehouses is they suffer from a staleness issue where the data still doesn't live in the warehouse, and it's not owned by the warehouse, it's owned by the underlying subsystem. So unless you have very, very tight controls around the updates and the flow of that data, the warehouse itself tends to become an add-on to the problem, right? So you have to build the same kind of validations we do on the regulatory front need to be part of your warehouse strategy. And what we have found is that most people build out their warehouse strategy with that as a secondary thought. And then what happens is the warehouse itself, although it may be a feeding system for some of the downstream parts of the process, like reg reporting, it still needs to be cross-checked in a sort of much more real-time nature than what they're doing. Warehouses in general aren't really going anywhere. I mean, they've data lakes and all these different variations of this, but they still have the same fundamental problems of the data being stale or inaccurate. And it still needs to be validated and much more aggressively when you're using it for critical reporting.
You're explaining that data is quite hard to get hold of. It's hard to validate. It's hard to make sure it's accurate. It's kind of hard to use. But if we stay at a high level, that is potentially a very substantial problem, because financial services is a very highly computerized industry, if you like. We used to refer to computers as information technology. So they eat data, they produce data. Data is the primary input. It's also the primary output. Yet it's obviously, from what you're saying, in a bit of a mess inside most financial institutions. It's scattered across systems. Some might be in a warehouse, some might not. Is it up to date? Is it accurate? And so on. So at a high level, when you go into an organization, how do you start to help them overcome those data silos, those fragmented formats, that lack of accuracy?
Well, what we've built out is a very flexible toolkit, which is really very rules-based, and it allows you to dynamically pull in that data from different places and put it back into sort of cohesive data sets, which are cross-source, if you will, right? The dispersion of the data is a natural part of the process, right? So what's happened over time is the reason it becomes such a challenge is that the expansion of the regulations are the ones that are mandating you put it back into formats which combine things which aren't naturally combined based on a business line or a business function perspective. And that's one of the core challenges. I mean, but in order to overcome that, you really need a very good set of technology with a suite of functionality, which is pretty hard to build. And you need a very good understanding of the data and the data challenges across the industry, which is sort of two key things that we sort of have and have built up over time.
If you're going to produce a regulatory report, you're going to have to, as you have just pointed out, pull in data from different places, from across different sources.
Yep.
So is your platform being used primarily to manage internal data, or does that pulling in and cross-sourcing apply to external data as well? So I'm going to produce a report to send to the SEC. I have to measure myself against what's going on in the marketplaces. So is your platform able to marry up the internal and the external data?
Yeah, we look at both, and there are certain aspects of the reporting where you've got from the regulator, you've got symbol lists which are reportable. You've got different parts of data in the industry that are external to the banks. If you're dealing with your counterparts, you may have data coming in from some of the clients or counterparts directly. So the platform can take in both sides of it and marry it back up and basically make sense of it and then use it as to validate and sort of manage the reporting process. It does both, which is kind of a requirement in many cases.
But it makes your problem more difficult still, doesn't it? Presumably that external data provides another range of formats and accuracy and validation questions as well, does it not?
Yeah, it does, and it would be a challenge if we were like hard coding things, but the platform is data agnostic and configurable. So from our perspective, it doesn't really create much of an issue.
Talking to you and reading the material which you produce, I notice you often say that the cost of not investing has to be high enough to persuade firms to invest in data management. This is clearly something you've learned from experience. What exactly do you mean by that?
Well, a lot of that comes out of my historical experience with the banks and brokerages where, data challenges are nothing new. They're part of the process. They're part of the infrastructure. It's just historically, there's been the appetite for fixing a lot of these things where it's quite complicated and can be kind of expensive in some cases, has been driven off of the cost of what is the impact of the data being wrong. And if the impact of the data being inaccurate is secondary or not critical, then there's generally been much less of a appetite to really focus on correcting it, because it's a matter of priorities and the assignment of resources across the company, right? I think to some extent that has evolved and changed over time, and that it's become more sort of dynamic and people are more focused on it in general, regardless of that cost. but that's a traditional view of how it's evolved over, say, the last 20 years.
As you've just said, organizations do allocate resources according to priorities which have been chosen. To put that crudely, budgets are allocated by a political process inside these major financial institutions. Would you say that the problems you're encountering in getting firms to reach that point where if we don't invest, the cost is going to be much higher than if we do, when you're getting to that point, is the challenge within the firm primarily a political one? Or is it primarily a technical one? It's just so difficult to capture and manage the data.
I think personally, like from our perspective, while banks may struggle technically with it, we've proven our solution to solve the technical issues. So I don't think when people look at us as a provider, I don't think they can see pretty clearly that we're doing this across a pretty large range of complex firms, and it's not a technical issue. I also think to some extent we don't face the kind of resistance we used to, sort of going back 10, 12 years. And I think it's become much more of an accepted. I think the industry as a whole is moving into this space where they know they need these kind of processes, and it's got a lot less resistance than it used to, say, 10 years ago, right? And so even now it's much less of an issue. Firms realize they need to cover the gaps in their governance and their data validation processes. We don't generally see anywhere near as much resistance to that as we used to.
You've pointed out that your platform it's configurable, it's customizable. An implication of that is that the data management problems inside any one firm are going to be unique to that firm. And there's a bit of me which wants to understand whether there are differences between the financial services industry and, say, industrial and commercial companies or government departments. But if you've got some observations on that, please do share them. But my main question is, is there a set of issues when you embark upon trying to clean up data management at a firm, which is common across all types of financial institution and maybe common across all types of, commercial venture?
Well, I think
when every job different.
Yeah, when you look at individual regulations, regulations have their own combinations of data, and they're pretty consistent. Types of problems we see across firms are the same at the end state, but the problem is the data underlying those and the makeup of feeds into those processes, or the business process behind those, tend to be different. So it's not necessarily that the end state data challenges are different, it's that the source of those problems are different because they're coming from different infrastructures, different business processes. And there's a lot of variation at that lower level as to how the data is managed and where it's coming from, which is where the variation comes from. They may end up in the same types of problems in the end, but they're coming from very different processes and sources across different firms based on how the firms are structured and the technology they're using.
You've just observed that the internal processes differ within firms and indeed within industries, which prompts a question, which is, we often hear talk of data governance. In other words, there is a risk that you'll get fined by the regulator, not just because you failed to deliver a report on time or that report is not accurate, but actually your internal data management, data integrity, data processing is lousy. In other words, regulators want to know that you're actually running the business in a way that if it gets into trouble, they can find out who's owed what. They want to know what those assets and liabilities are. They don't want to find themselves in another FTX situation where there are just a few spreadsheets known only to the CEO what was going on. So do you get involved in that process with clients of trying to encourage them to adopt a solid governance structure as well, or overcome data governance problems they have?
Sure. I mean, data governance is one of our core focus areas, right? I mean, if you look at data governance from a criticality point of view, that is being managed at the Federal Reserve level in the US, right? And it's a very high priority for the Fed, right? Because they view it as fundamental to managing the banks and the businesses that have a significant risk. The fines for data governance failures tend to be magnitudes bigger than fines for, transactional reporting like CAT or Ks or other things of that nature. And the scope of the governance activities tend to be a lot broader than individual reg reports. So it's a fairly complex process, but it is one of our sort of specialties, if you will. And we are involved in that with firms in terms of putting in place overall governance frameworks.
One of the things that occurs to me as I look at the regulation or re-regulation, if you like, of the financial services industry over the last, it goes back beyond the financial crisis, it really goes back 25 odd years, I think now. The regulators are asking more and more of regulated firms in terms of data. It's not always clear to me that they're doing very good work with that data, but anyway, they're asking for it. And I wonder if what the underlying process here is it because data is being collected digitally, it can be delivered digitally, that regulators are saying, well, firms can definitely provide us with that sort of data, let's ask them for it? Or do you think that there is a sort of higher purpose behind it? They think they can do, as regulators, a better job if they have more data. Which of those do you think is driving what's going on here, these incessant demands, if you like, for more and more data from regulated firms by regulators?
Well, I think the regulators overall have gotten better at using the data they have, and they've gotten a lot more. They've built out a lot more technology on their side, which allows them to really understand the data. And if you look at the reporting, there's a couple of different slices of it. There's the whole sort of bad actor part of this, right, where you're looking for bad actors in the industry, right? Then there's the risk aspects of it and making sure the firms aren't every sort of one of these sets of regs has different kind of focus areas, right? But they've gotten a lot better at using that data, making sense of it a lot quicker than they would if they didn't have processes and technology behind it. And I believe they're actually asking for it because they feel that it's going to make them able to more quickly find potential issues and reduce the risks in the market. So I don't think it's nefarious. I don't think they're just kind of looking at it through saying we want more data. I mean, obviously, if you looked at the cost of CAT in the US and how much the industry is paying for it, the data costs a lot of money to the house, right? So I think they're looking at it because they feel they need the data, and they're actually trying to make more sense of it more quickly with the tech stack that they have.
But it would be impossible for these regulated firms to deliver this data if it wasn't in digital form and deliverable by digital technology.
Yeah, no, absolutely. And it's interesting. One of the regs we have in the US is called electronic blue sheets, and they actually used to be delivered on paper. I mean, you would actually have to transcribe your transactions for the regulator and give them a stack of papers and say, this is what we traded. So yes, you couldn't do a lot of transactions with that.
Yeah. and they probably had a lot of regulations to read those paper submissions as well. We've both mentioned the Consolidated Audit Trail, or CAT, which is obviously the latest in this long line of regulatory requirements which have been laid on the industry, dating back, as I say, more than 20 years to those, Patriot Act amendments to the Bank Secrecy Act, which is itself was the first anti-money laundering legislation. It's over 50 years old now. And then the great financial crisis added all sorts of other reporting obligations, OTC derivatives, Form PF for hedge funds, and so on. But CAT raises this reporting to a whole new scale, doesn't it, compared to those measures? How are you helping? How can your N-tier platform help clients cope with CAT?
Yeah, I mean, I think CAT in essence, because it's a complete audit trail of the entire transaction lifestyle, including the reference data, right? So the volume of data at the top of the house for the key market players is absolutely enormous. In some cases, it's, maybe 6 to 10 billion records a day for an individual firm, right? So that scale by itself is difficult, right? But what we're focused on for clients is we're helping them validate that the data is accurate. We're looking at that data in multiple sort of slices back to its source data, helping them ensure that the data is complete. CAT by itself is about 80 different data sets, so it's quite quite extensive, right? And we're also, for some firms, we do the reporting. For some firms, we help them clean it up and fix the reports and send those to the regulators. So it's a variety of services based on the client's profile, what they need help with. But we're deeply involved with a lot of firms on this.
Are you able to help the regulators cope with this data influx as well? Do you work with regulators directly?
We we have a lot of contacts at the regulators, but we tend to stay focused on the clients. And if we are talking to the regulators for whatever reasons, it's generally in relation to some issues our clients may have. We tend to keep a client-focused approach to this. The regulators know who we are. I think they benefit a lot from the work we do, because the end result of what we're doing is that they're getting cleaner data from the firms. And I think they appreciate that, but we're not working directly with the regulators. We view this as a service for the clients and making sure they meet their obligations, not a regulatory service.
But to service the clients well, you need to understand what regulators want. So
Absolutely.
You have an informal dialogue with them?
We have a dialogue with them. We also have a very good team of sort of industry sort of experts that work for us in the compliance space and understand the regulations.
Uh-huh. And you mentioned a minute ago that the reason regulators are asking for more of this data is because they want to identify bad actors. They want to identify crises in the making. Do you ever worry that however they're noble their initial motivation, the sheer quantity of data that they're dealing with here is going to overwhelm them? In other words, there's a kind of fallacy at work here that if the regulators are thinking, well, if we get more and more data, we can pick up more and more things and make better and better judgments. But do we have the technology and the algorithms and the capability which can be put in their hands to make use of the data they're getting, or are we just proceeding on the basis of a fallacious line of thinking here?
No, I believe the technology is out there. It's progressed enormously over the last sort of 10, 15 years in terms of the ability to apply automation with this data. So I don't see them. It's a large data set, but it's not the largest in the world. I mean, there are larger ones, and I don't see a problem from a tech stack perspective in the regulators being able to use automation to analyze this. I mean, obviously they're not looking at it manually, not initially, right? So they've probably got layers of processes to identify things and then manual reviews on top of that. But I don't see them getting overwhelmed by it.
Do you think you'd have been able to say that back 20 years ago when you started NTIER?
No, probably not. No, I mean, the volumes were significantly lower. They didn't have Amazon or any of these big cloud providers, which have massive infrastructures. Doing this without that becomes very, very difficult.
Mm-hmm. Now, you've been around a very long time compared to some of the fintechs which have emerged to operate in the data space or indeed consume data. In some ways, the whole blockchain revolution, the whole cryptocurrency thing, whatever we think of it as a phenomenon, and whether it's going to grow from where it is now or not, it was based upon mining data, distributed data, on smart contracts eating data to feed these, from these oracles, which the smart contracts rely on. And then you've got these various forms of digital money, like stable coins, like tokenized deposits, which again have to be based upon some sort of proof that there is something backing these things up, asset backing these things up. And when we get to equity and bond tokens, we'll have the same issue. If they're asset backed, where is this asset which is backing this token?
Yeah.
And indeed, when we get native tokens, again, the data and the technology become pretty much the same thing. So this is a kind of interesting point we've reached in the development of information technology, if you like, data technology, and its latest iterations. In effect, the data and the technology are kind of fused. I just wonder if you see opportunities for your business in fintech, blockchain, cryptocurrency, tokenization.
I mean, there's sort of two sides of this, right? I mean, on the fintech side of it, as like a lot of these fintech firms, obviously the regulation on them has gone through the roof, right? And they're one of our key market segments. So we have a lot of the fintechs where like they're doing reg reporting through us. And as the regulators continue to tighten up, because they are going to continue to sort of make this fit within the existing frameworks as much as possible, right? So the regulators are very focused on regulating the fintechs and all the digital sort of portions of this, whether it's coin or the exchanges, whatever. But that's a key market segment for us, and we tend to be experts in that segment, and we tend to have a very good footprint there, which is growing, growing in line with the industry, if you will. We've looked at some of these other types of tech stacks ourselves and tried to figure out if there's a place for them with our clients, in terms of offerings, and we're still working through some of that, whether it's blockchain or not, but it's still in flux from our perspective. But the fintech space is great for us, and we have a lot of clients in it.
To some extent, of course, the bandwagon has moved on from blockchain, and the flavor of the month now is artificial intelligence and machine learning.
Mm-hmm. Yeah.
As I said at the outset, those are more than usually reliant on eating data. Does your platform either feed data into these machine learning algorithms, or do you make use of machine learning algorithms in your own business?
We have variations of that. I mean, if you look at a lot of what we're doing is, we're taking data sets that aren't together and we're putting them back together in a way that allows you to figure out what is right and wrong. That by itself, it tends to be sort of an intelligence process where you have to look at a source of records and say, okay, I've got this. If you think that you have a transaction and maybe you have 5 different views of that transaction when it's comes from your OMS or your back office or your risk system, you kind of have to look at that data and figure out, okay, what part of that is right, what part of it is wrong. That ends up being rules on our side, and we're applying logic to come up with likely scenarios for which ones are correct under what different characteristics of transactions. It's sort of an embedded AI within our process, but it's to some extent, it's sort of user assisted, if you will, right? The final say on our side still rests with the user to lock in rules and things, but we're looking at it basically saying, okay, this is the most likely version of this.
Can I ask you a slightly unfair future-focused question, which is about digital identities? And I'm asking you partly because we're a little bit obsessed with this at Future of Finance. We see it as an important methodology. But I'm also asking it because I start to see it's getting a bit of traction with asset managers and with banks who see it in the first place as helping to solve their customer due diligence, customer onboarding processes, which are highly manual, paper-based. And if information about an individual or a corporation was available in a digital form, and it was a very rich data set, which covered everything from somebody's passport and driver's license right through to their submissions to whatever the local corporate register is, their financial statements, and so on, you could start to build up pictures of customers, which are much richer and would enable you to move on from this paper-based digital process. Do you see, given that you're in the data management business, do you see digital identities as an opportunity for your business, simply because they are ultimately a product of data aggregation and data management?
Yes, to some extent. I mean, obviously, KYC, right, is all based on digital identity, source of assets, right? I mean, there's an obligation for firms to sort of really dig in and figure out people's sort of source of funds and other characteristics of their businesses when they sign up for any sort of brokerage account, right? I think the more data that people have at their fingertips, it's historically, it's been a very sort of paper-based sort of, believe what the client says kind of process. But I think firms are definitely leveraging more data sources, and there's a lot of stuff out there on people that, they may otherwise not disclose. So there's certainly a space for that. We're involved in the reference data space quite a bit by default because of the K's work that we're doing in the US. And I think the more data that's available to help sort of do profiling of people, firms, the better off the and clients are going to be. So yeah, we're involved. We haven't gotten into the point of aggregating external sources. And I think when you talk external sources, this is an interesting place where they probably apply.
A final question for you, Peter. Something of a philosophical one.
Mhm.
You're a software engineer, and I may be doing all engineers a disservice when I say that engineers exist primarily to fix problems. They're interested in fixing problems. Can the data management challenge which you've been working on all these years ever be fixed? And by fixed, I mean fixed in the way that we know how to pipe oil, we know how to channel electricity down copper wires. Is data fixable, or is it just a problem which never ends and you just you iterate towards better and better solutions to short-term challenges? Is the data challenge fixable? That's my philosophical question.
It's an interesting question, right? Because when we go back over the years, if I were to go into a team of senior like IT folks 10 years ago, they'd be like, oh, don't worry about these data challenges. We're in the process of fixing them. Right. And the idea of fixing them always came down to sort of the aggregated data warehouse, or like, oh, we're going to consolidate to one source. But the reality of it is business systems are built for businesses and business lines. You can't have one monolithic system. And as soon as you have systems at a business line level, whether it's a product level, whether it's a risk level, whether it's a corporate reporting level, by definition, you're all relying on different versions of the same data. So unless someone is going to come up with one massive system to run an entire business, the problem actually never goes away. Right. So no, it's a nature of how technology works, how technology develops to support businesses. And the fact that you can't really build, overly complex cross having one large system for everything just is never going to work. The system retirement aggravates that as well, since systems never get retired, but that's a different part of it. But no, I don't believe the problem will go away. If I thought it would, I probably wouldn't have started the company.
It makes me think, of course, that it's not just the nature of technology, it's the nature of business. It may even be the nature of capitalism itself, that you're searching for ever more efficient solutions to a central problem of efficiency.
Yeah. It reminds me of when I started my career, we had this different problems and they would always go up the stack. Mm-hmm. First point, we were fixing like EPROMs and reprinting network switches and proms to get faster. And then it was the OMS, and but the data is really the top of the stack. And the data challenges, I don't believe, are going anywhere.
Great. That means N-tier financial services has a long runway to enjoy over the next few years. Peter, Peter, thanks very much for sharing your experience and your thoughts with the members of Future of Finance.
My pleasure.